Good afternoon, traders. Hello, hello. We're going to get things kicked off today with crash or correction strategies for making money in a down market. First of all, let's make sure we're all on the same page. Market's down. A lot of people are getting hurt. A lot of money is being lost, but they didn't have to. And that's why I wanted to do today's session, talking about ways when the market reverses, whether it is a correction or a crash, that you can focus on generating income, generating money, even in a down market. Now, some people might say, as an investor, the best move is cash. Well, that might be an investor's move, but as a trader, swing trader, option trader, day trader, the best move is generating income. So we're going to focus on some of that today. Hi, my name is Daniel. I'm with VantagePoint AI, and we're going to get things kicked off here. I just want to do a quick sound check and make sure everything is working from your standpoint. You can hear me. You can see me. I see the chat is already going. Hello, Anil Kumar. Madan, Prosper on Purpose. The Haas 69. Good. Glad you guys are all here. Good afternoon. If you are in this session and you could hear me and I'm coming through to your speakers okay, just wave a hand in the chat box and let's make sure everything is working. I see that there are several people in already. I know there was a lot of interest in this, especially with what's going on in the market. So Connect Technology, I got you too. Glad you're here. As you can tell, if you haven't attended one of our live sessions before, I try to keep my eye on the chat. I try to keep it as interactive as possible. Today will be no different. Well, hello, hello. Prosper on Purpose. I love it. Nice to see you. Things are working fine. We're going to give everybody a chance to get logged in because this session, I believe, for traders is a valuable session, right? And the reason I say that is because whether you're trying to create, revenue growth, income, financial stability, financial future, you want to buy something, you want to do something, the markets are a great way, in my opinion, to produce income if you have the right approach, if you have the right tools and resources, if you have the right strategy. So whether this is a correction or a crash, and we know that the markets are down and they're down hard, we're going to go over a couple of strategies today from an educational standpoint that have been proven to be successful, that have been proven to provide traders an opportunity to continue profiting in these markets. So we're going to spend some time today just talking about the markets in general and digging into the details. I'm going to use VantagePoint because that's the tool that I utilize to make my trade decisions. Ultimately, you can use whatever tools you want, but we're going to walk through, I think, some valuable information from an educational standpoint. I am not providing trading advice. I'm not a trading advisor. I am here from an educational standpoint helping you understand different ways to look at the market. So I think we've got a lot of people in. Wow, that grew pretty quick. So I'm glad to see that. Let's go ahead and dive in right now and just dig into what's going on in the markets. And before we do that, let me just share my screen here. And the reason I want to do that is I want to educate everybody on what I am looking for so that as we go through the rest of this session, you know what to look for on the charts that I'm seeing. I like to use VantagePoint's artificial intelligence. It's a high-powered technical analysis tool. Understanding how to apply good, sound technical analysis in a trader's market is essential, in my opinion, so that this way you can provide yourself all of the opportunities that are available to you. Now, remember, trading involves risk. You shouldn't be trading with money you can't afford to lose. That hasn't changed at all. Excuse me. The key is making sure that you've protected your downside so that you can maximize your upside potential. So looks like we've got a few more people in, so let's dive in. Right now on the chart, I have Starbucks. And the reason I have Starbucks is simply because I want to teach you what I'm going to look for and what I'm looking for and what I'm utilizing to make my trading decisions. This is a very easy chart to learn from. And the reason I say that is if you look at the chart, you can see some red and green areas on the chart. From a technical analysis standpoint, I use a predicted crossover system in VantagePoint. It has predictive information in the formula. And I'm looking for the point that there is a crossover. Not the best circle, but let's go back and do it again. There. I'm looking for the point that there is a crossover. I'm looking for the moment that I can utilize that information to tell me that the trend is expected to go up, or conversely, just as powerful, if not even more powerful, depending how you look at the markets, just to tell me when the trend is expected to go down. So those crossover points are key to my analysis, and understanding at the point that you're seeing a reversal is key to understanding when to deploy some of these strategies that I'm going to be going through today. So in Starbucks, we can see we got a crossover to the downside right here. If I put my cursor on that day, that day is 12.5. So on December 5th, there was an indication that Starbucks was expected to start losing value and the trend was expected to start going down. That's the first day I got that inclination. And then I use something I call the neural index here at VantagePoint, and what it does is it tells me whether strength is expected to be bullish or bearish over the next couple of days. You might be using other tools to identify strength, but this is one of my primary ones, and it's indicating that there's bearishness expected on December 5th as well. And then I use predicted momentum. And my predicted momentum indicators, they are oscillators, which are lines indicating which way the momentum is expected to go. It has the ability to determine momentum over the next 1, 2, and 3 days. There are 3 lines down here. So what I'd be looking for a bearish indication is when the blue line crosses below, the neural index is red, and the momentum is bearish, and those lines are pointing down going in to that day. Momentum, by the way, if you're taking notes, write this down. Momentum is a market condition reading, right? It's a market condition reading, not necessarily a timing reading, because momentum can build stronger and stronger over time, and it can wane over time. Well, I use that to say what was happening before I got my prediction. So I look to the left of the day that I got the crossover in the neural index, and it tells me that there is momentum, bearish momentum, that has been building bearishly for several days prior to the trend expected to cross, or the trend expected to go down, and the neural index expected to go down. So right away, I can see very quickly what is expected to happen on the horizon. And for those of you that don't know, I don't know if we have any VantagePoint family members in here. It looks like there are some people from the names I read in the chat, but if you're in this session and you utilize the VantagePoint software, let me know that. I always love to know when you're here and taking advantage of this content. And if you're not a VantagePoint user, I'm also very happy to know that you're here and taking advantage of this content, because you might hear something here that could change your trading forever, all right, in a good way. All right, so let's take a look. That's the moment that the crossover happened. We see it, and as long as that blue line stays below until it crosses back to the upside, I have clear indications of that bearishness expected to continue 1 to 3 days in the future, right? When that blue line turns up right here, that's an indication that that bearishness is coming to an end. It's starting to consolidate, and I could be in the near future getting a reversal to the bullish side. What would tell me I got a reversal to the bullish side is a crossover there, a green neural index on the same day, and then again, looking before the prediction saying that there is bullishness expected on the horizon. So again, I want everything to agree. We call this the 4 points of confirmation, and when they agree, I know I've got information that I need to make a valuable trade decision. If I short the markets when I get across to the downside, I can certainly short the market, or I can buy puts, or I can sell some covered calls, depending on your strategy. There's something you can do there. And then when the bullishness comes back, or is expected to come back, it can certainly push to the high side, and then I can then just buy the stock, buy some calls, sell some puts, right? You decide how you want to trade it when your indicators, whatever you're using, are telling you that now is the time to make a decision. Hey, Burl, Karen, I see you guys. Billy Ray, Mark, yes you are. Thank you very much for being here. MG, awesome. Neil Kumar, recognize you. Absolutely. Rattle, good. Hey, there's Moho. Nice to see you. All right, I just wanted to call out some people that were chatting in. Thank you for chatting in. So if we had utilized this kind of information in Starbucks to the downside, let's say we just went crossover to crossover, just simple. There's a hypothetical gain here of about 9.5%, 9.27% in 16 trading days. 5 put contracts of that could have produced over $4,600 in hypothetical gains here, minus the premium. Call that a $3,000, $3,500 profit, depending on strike price and volatility. And from an options trading standpoint, you know how to do all that. If you don't, then of course you can check back on some of the videos, and we'll dig into options on other videos. There's several of them on our VantagePoint page. By the way, if you haven't already subscribed to VantagePoint software, VantagePoint AI YouTube channel, the one that you're watching this on. Just go ahead and hit subscribe right now because we do lives on a consistent basis, and you probably don't want to miss one of the lives because there could be something there of value to you. All right, so we know that's a short selling opportunity to the downside, and then we've got a bullish opportunity here with things reversed. And up until the closing bell of yesterday, let's see what this could have produced for us here roughly. Again, I'm not giving you exact math, but that's 24+%. 500 shares, 11,000 bucks in 37 trading days. This hypothetical gain combined with this one, you're talking about a $15,000 gain, change in price of 15,000 bucks from a value standpoint with 500 shares. If you're just talking about percentages, take a look. 33, 34% between those two trends. All right, good. I just wanted to create a baseline for everybody that's in this call today on what I'm looking at, so that as I walk through these strategies, you're not trying to play catch up on what does he see and why does he see it, because I'm open to answering those questions in the chat. But of course, I want to make sure that the strategies that we're going over are digestible. So that's a great place. So if you've got a question, by all means, pop it in the chat. Happy to answer your questions if you got one. And if it's something that I can answer that's on topic, obviously we have a specific thing that I want to dig into. And if you have a ticker you want to look at the end, you can always pop that in the chat as well. All right. Last night at 6:30, Starbucks was saying that there's still some bullishness left in the trend. And then my software provides a predicted high and a predicted low every night for every asset available in the software. For the users here, you know that. For our VantagePoint family members, take advantage of that predicted high and predicted low on a consistent basis. But it was expecting a higher high and a higher low today for Starbucks, which means there was some bullishness expected. Now, you may be thinking, personally, that the markets have gotten kind of beat down today. How could Starbucks go up? Well, go take a look at Starbucks, right? Go look at it online and see if that's the case. But the key here is that Starbucks had bullishness in the day, had bullishness in the trend. And as the market was tumbling, just think about the last 3 days at least, Starbucks increased in value. Even to the point, I think it's probably broken its 52-week high today and has a potential, or at least gotten up to the 52-week high and has the potential to move higher. All right, good. I'm glad that was, I'm glad we're all on the same page there. Now we know what we're looking at and how we're looking at it. The key here is, how do you apply this to protect yourself or benefit in a down market? Well, take a look. Here is the S&P 500, right? A lot of volatility lately, a lot of opportunity for traders to really maximize what they're doing. But the reason I'm showing you this is for this right here. This was Monday, yesterday. This was Friday. This was Thursday, okay? Last week. Those are the days that are on the calendar. This was what was predicted for today for the E-mini S&P 500, right? If that's what was predicted today for the E-mini S&P 500, then let's just walk through the analysis that I used to make a determination around what the market is expected to do, all right? The blue line crossed below right here. You can see that happening. If I look down like we just talked about and see that the neural index was also red, indicating bearishness on the horizon on Thursday last week, and then I look further and I say what was going on with momentum leading into that day, and I think it's all safe to say that momentum had turned down and was clearly turned bullish on Thursday, bearish on Thursday. So all of our indicators clearly, Thursday of last week, indicated bearishness. Let me put my cursor on that so everybody can see that that is 2:20, right? That was Thursday. Let me check my calendar here. That was Thursday. Okay, so we're right. That's when VantagePoint indicated bearishness on the horizon, right? That's when it indicated bearishness on the horizon. That's saying the trend is expected to go down over the next day, 2 days, 3 days, depending on your set of indicators. In this case, this is a very clear indication of bearishness the next day. The next day we got that. The software also indicated the bearishness on Monday. So think about this, folks. On Friday, what I was saying when I looked at VantagePoint, and for those of you that use the software, you know you get it on Friday night at 6:30, and it's good for Monday morning, and you had all day Saturday, Sunday, even early Monday morning to do some analysis and know that Monday's market was expected to be lower. Why? Well, the blue line is below, the neural index is red, we still have the same conditions. So there's no doubt that the market was expected to go down on Monday. I say no doubt. This forecast can be up to 87.4% accurate. So I guess some people could have had some doubt, but from an accuracy standpoint, I'm looking at that saying bearishness, and then going into today, seeing bearishness as well. So for those of you that are looking at this chart and saying, well, how do you have that kind of confidence? Well, I'll tell you, this software has been using AI since 1991. So when the blue line is below, and it's been forecasting accurately a long time, it's below that gray line and that shaded area is red, I know that trend is expected to be lower. I also know that the neural index is red, saying there is weakness, and I also see that momentum is creating lower highs leading into that day, indicating the 1 to 3 day momentum is also bearish, right? If momentum is bearish, price is bearish, and strength is weak, then it's safe to say I can expect a move lower, all right? Kedar, thank you for your question. Kedar says, can you show what's predicted for the ES tomorrow at 6:30 p.m. Eastern time? The software updates every day for the next trade day, the day after that, the day after that. So at 6:30 tonight, everybody will have tomorrow's forecast. What VantagePoint is saying as of right now is that today was expected to be weak. The 2-day trend indicator is expecting 2-day weakness as well and 3-day weakness. So there's really no change. No matter what indicator set I use, there is bearishness on the horizon for the S&P 500, right? And by the way, there is plenty of room down to this support level. For those of you that use support and resistance, this is the support level that is in the next, I guess it's in the clear view. This is the support level that is right in front of us that we'd be analyzing. And the reason I say that is because if the market has a support level that will stop the price fall, or could stop, I should say, and cause price to pause, where is it? Call it 59.35, right? The low of that day is 59.35.50. Well, it's safe to say that there's still room from where the market is closing today, or is it today, and that support level. So I don't have anything else pushing up bullishly on this. So no matter how I slice this for Kumar and everybody else, Kedar and everybody else, is that there is certainly bearishness on the horizon. Now, the E-mini NASDAQ. Do some analysis. By the way, folks, if you're not picking up one of the things that I do, let me just be clear about it. I do a market overview. Before I ever make any trade decisions or market decisions or analysis decisions, I look at the overall markets. It's a top-down approach. What's the NASDAQ, the Dow, the S&P doing, right? What are the sectors, different sectors doing? What is trader sentiment? What is seasonal? All of that stuff is a market overview so you can understand what's expected to happen. Well, I can assure you, especially based on what you're seeing here, starting last week, this bearishness was evident. The artificial intelligence said it. Here is the NASDAQ, same day, February 20th, Thursday of last week. Almost a cookie cutter chart on the NASDAQ on the same exact day. So when you stop and you think about that, it's like, wait a second. The trend was expected to start going down both in the ES and the NASDAQ on the 20th. Price went from strong to weak, same time. Momentum indicators rolled over from bullish to bearish at the same time on the two indices. It doesn't mean that the software indicated the bottom falling out. That's not the case. It indicated bearishness on the horizon. It indicated a pullback. It indicated a reversal, a down market. How bad that market goes down is, I don't know that anybody can interpret that. If they're telling you that they know exactly how far the market is going to go and how bad it's going to be, I don't know how they do it. Because I can tell you with a high degree of accuracy based on what the software is telling me, what the market is expected to do, how bad it's going to be or how good it's going to be, that is yet to be seen. But I can tell you there are some incredible strategies that I'm going to start going over right now that you can use to maximize in this situation. For you futures traders, one of the strategies is seeing this and simply short selling the NQ or the E-mini or the micro NQ, however you slice it. That's one of the strategies that is a very powerful strategy. So what you're looking for is the open the next day, right? When you're looking for the open the next day, Whether it goes up or down is not of my concern. The key is, where did it open compared to the day before? And what is the artificial intelligence or my software, my indicators you might be using under indicators, other indicators, and that's okay. What did my indicators tell me about that market? And it was bearish. So there's a great, right there, there's a great short selling opportunity. That this is the NQ, right? So down to where it went today, let's see, where is the NQ at right now? 21,193. Oh, I almost nailed it right there. 21, here's 21,195. VantagePoint predicted a low of 21,220, so it's lower than the low. So that means it went lower than what the artificial intelligence predicted. And if you had short sold that, one contract is a gain there of 18,000 bucks on the E-mini NASDAQ. It's a hypothetical gain, as you can see, but it is a powerful gain when you've got this kind of information at your disposal. So for you futures traders, hopefully you're able to take advantage of that turn down. For those of you that use VantagePoint, even if you trade the Qs because you like ETFs, a very powerful short selling opportunity right there in that moment, based on what the indicators and the information that I utilize were saying. So that's strategy number one. If for those of you that don't short sell the market, again, I'm not providing trading advice from an educational standpoint. It's safe to say that there is a huge opportunity there in that case. But let's say you don't short sell the market. Let's say you don't trade options, so you can't buy puts or sell calls. Let's say you're trading in a retirement account that doesn't give you the ability to do some of those things. How do you profit in a down market? How do you take advantage of a market like this? Well, if you haven't seen this before, let me introduce you to the SQQQ. This is the NASDAQ ETF that is inverse the Qs, okay? Inverse the Qs. When I say inverse the Qs, what I mean here is that when the Qs are going down, SQQ is going up, okay? It's called the Ultra Pro Short QQQ. It's from ProShares. And you can see that right at the top of the screen. So knowing that there are inverse ETFs out there and available, knowing that there is a selection that you can make in your portfolios, and this is an ETF that trades just like a stock. A lot of you are probably already buying ETFs that is inverse the overall market. Take a look at the trend on this just in here, not even including today. You're talking about 10.5% right here in the last couple of days on an ETF that was at the open on this day, 2663. So at 2663, there's an opportunity there to take the SQQQ to the long side, either buying calls or just simply buying that ETF. The close today is at 30.59. Where's 30.59? All right, I'm going to put this line, just going to use my tools really quickly and pop this on to 30.59. There we go. So that's a 14 plus percent, 14.5, almost 15% move right there in Friday, Monday, including today, using an inverse ETF. Is there anybody in here that just learned? Do me a favor, go to the chat really quickly. Is this the first time you've heard of SQQQ? Is this the first time you've seen the opportunity to use inverse ETFs? Because a lot of times when I talk with traders about some of these strategies, it is the first time, and in some cases it's not, and some people might already be trading this. Is there anybody? So go to the chat, tell me if this is the first time you've heard of SQQQ. Is there anybody in here that has a trade on or is taking advantage of the SQ move, right? Thank you, Bill Ray. I appreciate that. So first time you're hearing it, good to know. This is really great. Again, it's purely education, but really great from a retirement account, a retirement trading account standpoint. If you stop and you think about it, it's like, wait a second, the market is tumbling, but there's an asset that is going to go inverse the market that you can take advantage of, just like a stock in any stock trading or ETF trading account. That's a big win, in my opinion. Hey, Ivan, thank you for that. I see Dan J. Armstrong, thank you. I see first time, Rado. Good. Well, I'm glad you were here then, because that could be, like I like to say, that one golden nugget that can make a difference in your trading. That could be one of them, right? The SQQQ. Now, the question I always get, are there other inverse ETFs out there? Absolutely, there are, right? Absolutely there are. One that's kind of funny is the dog, D-O-G, right? And that is the inverse the Dow. Take a look. There's the inverse the Dow, right? You can see that it is screaming higher here at the end of the chart. Let me zoom in on it for you so you can see it. There you go. Look at that. That's a big bullish move on the Dow when the Dow is falling. So there is another one. As a matter of fact, in my software, I have a ton of inverse ETFs. I mean, let's see. Let's go see if we can find a... let's see. Here's gold. Well, we know gold has been climbing dramatically. Gold has been doing some great things. And now gold is reversed. Take a look at this. There you go. Here is dust, D-U-S-T. While gold was climbing, and for those of you that didn't trade gold or didn't see gold, let me show you something. I'm gonna put these side by side, as a matter of fact. Let me give you guys a little preview of this. I'm gonna take this down to 2 months. All right, we're looking at 2 months of dust and 2 months of GC, gold. And the reason I'm doing that is so that you can see they are the inverse of one another, okay? And when you stop and you think about that, gold itself is down today over 1%, right? Down over 1%. Gold is at 29.29. VantagePoint indicated it could have a low, down that low around 29.50. Look at the momentum on gold. Bearish, bearish, bearish. Lower highs, right? We got a mix between red and green. It's no longer just in a major bull market. It's starting to consolidate. Well, if you go look at dust over here on the right, on the left-hand side, it's the exact inverse. Gold is going up, but dust, which is an inverse ETF, is going down right up until the last couple of days, okay? Right up until the last couple of days. Those couple of days could make all the difference when it comes to your trading, but not knowing that inverse ETFs are a way to take advantage of a down market puts you at a little bit of a disadvantage, and hopefully this is something that you can use in the future. If not, that's okay. As long as I opened your eyes to something new, that was the point of this session related to these stocks and ETFs. Now, let's keep on going, right? Let's talk about something like Tesla. Is there anybody in this session today still holding Tesla and hoping for it to reverse? Maybe you're a long-term investor in Tesla and you think, you know what? Things are going to change. It's finding support down here and things could move higher very quickly. Support is clearly right there around 324. Did anybody start the day or go into this week thinking, you know what? It's finding support and it's going to turn around. And it's okay. Put it in the chat if you want to. You don't have to. But if you were thinking about that and thinking, you know what? There's an opportunity with Tesla. Maybe you're buying on the way down, waiting for it to go back up. If that's the case, today was a tough day for you. I'm sorry, but it didn't have to be. Remember the analysis that we talked about at the beginning of this session, right? The blue line is below, pointed down, the neural index is red, and the momentum indicators are pointed down, going into that day, rolling over, going bearishly. Everything about Tesla was saying this support level that is down here at 324 could be broken. How do I know that support level could be broken? Because I've got momentum indicating potential breaking of that support level. I can load on my volume and see I'm getting increasing bearish volume. For those of you that know, increasing bearish volume with bearish momentum is a support buster. Those are the two things. Those are, oh, I'm sorry. Sorry, the Hawes. Sorry about that. Those are the two things that can break a support point. And I was saying sorry because, you know, we have some people that are still holding it. That's okay. It happens. But if you've got the tools, if you've got VantagePoint at your advantage, or you've got some technical analysis or a tool that you've been relying on, I don't care what it is, and it's making an indication like that, then you've got to be ready for what's going on. So the question is, how do you make money in this scenario? Well, take a look. I'm going to walk you through it right now. First things first. When VantagePoint indicated that this was going to start going down, it was January 28th. The neural index agreed, and the momentum indicators had some bearish and consolidation to them. All of them weren't completely bearish. You can see that there's one, a little bit lower highs, so I guess they were all a little bit bearish. But when you stop and you look at this, it's like, hold on, wait a second. If I'm holding Tesla, I can go, if I'm holding at least 100 shares, I can go sell some calls against Tesla, right? Selling calls against Tesla at a 418, a 420, wherever you want to sell those calls, allows you to keep premium all the way down, mitigating your loss from that investment, right? By selling some calls. So in a down market, when you're investing in a stock like Tesla or something that has a lot of liquidity and there's a lot of interest in it, then you can certainly sell calls all the way down if you are an options trader and you're familiar with selling calls. It's called writing covered calls. Maybe check that out online if you're unfamiliar with that, right? So when you stop and you see this, when you stop and you think, it's like, okay, all right, so let's take advantage of this to the short side. And I want to sell some calls on this. How do I, or maybe I want to buy some puts. Let's just do simple buying some puts at this point. Let me show you how to do that utilizing a tool like this or any other chart. We got a close right here on Tesla. This was 128. The close was 398.09. If you're expecting it to go down and you're going to buy some puts on this, you could buy deep in the money. You could buy the 398. I think Tesla has that one. You can buy the 400, which is slightly in the money, right? You could buy the 395. You know, you decide, as long as you are, in my opinion, not from an advisory standpoint, near the close. If you go too far out the close on your calls, if you go out and you buy I don't care how weak you think it is, you go out and buy a 360, saying, you know what, it's at 400 right now, it's going to go down to 360. The likelihood that you're right in time is so low that, in my opinion, that's a high risk scenario. Buying way out of the money puts, I said calls, I apologize. Buying way out of the money puts in this scenario, in any scenario, way out of the money puts and way out of the money calls will help lower your premium, especially with the volatility that's going on. But it's just a high risk scenario, in my opinion. Sometimes it works out and we think we're genius, but in my opinion, trading from a systematic approach is much more valuable. By the way, I see a couple people saying some nice comments. Thank you for that. Very helpful. Galavan, do me a favor. If you have questions about any of this stuff or you want to dig in, I see a question about, Rado, can you look at NVDA, look at NVIDIA? I see the NQ and the ES. Can I see the NDX and the SPX? We use the NQ and the ES for that, Madhu. So that's what you've got there. If you have questions that I'm not able to get to in this session, go to VantagePointForecast.com and we'll be happy to answer your questions. Somebody can reach out to you, an AI expert here, and answer any questions you have. We'll pop that in the chat. It's VantagePointForecast.com, and that'll give you the ability to reach out to us and get any of those questions answered. But back to this scenario. Let's say we bought the 400 put in this scenario, right? I'm looking to set my expiration out in a down market like this and where there's bearishness going on. I'm always looking, no matter what, to set my expiration out between 30 and 60 days, right? You can do it how you want it. I'm just telling you I'm doing it, right? So one put, 400 strike, 30 to 60 days out for an expiration standpoint. So that is the scenario that I would have deployed here at this situation when I see that cross to the downside. Am I expecting to hold it 30 to 60 days? Nope, I'm not. That's just the expiration. And why do I set my expiration out in the future but don't expect to hold it that long? Time decay. I gotta find a way to beat time decay, which means if I've got a 30-day expiration on that, then I'm looking to hold it for half that time. If I've got a 60-day expiration on that, I'm looking to hold that for half that time, max. Now, in my opinion, the best way to go about it is set a target. If the target is, I need to make 50% on that option before I exit it, great. When I make 50%, I can exit it. Have a trade plan, trade that plan. Some people say, I won't exit until I make 100% on that option. Options traders in this trendy kind of market that we have, both bullish and bearish, you know what I mean? Set a target, and when your trade has hit that target, you can exit it. I don't care if it's here. That'd be great, right? Bottom of the market. I don't care if it's here. You can take that exit at whatever point that you want. Just understand that the closer you get to expiration, the more impact time decay is going to have on your value of that option. All right. So in this case, setting that expiration out, again, that was 129. Setting that out to the March monthly expiration gets you just inside of that 60 days, gives you the ability to hold for 30 days. And that is this Friday's expiration point, or any point between now and then where it's like, you know what? I've probably taken enough profit out of this. And in this case, you can see, I don't know where Tesla is today, but I'll take a look. All right, Tesla looks to be at 302.80. 302.80 from a close standpoint. Is that right? Whew, boy, talk about a monster move off of this forecast. Blew through that support point and just kept on going. So from an underlying asset standpoint, we said one put, 100 shares, $8,000 minus the premium. That's a $5,000 gain right there in one move. And from a profit standpoint, that's well over 100%. That's probably 300%, 400% by the end of the day today, simply using that crossover, simply using this information in the software that indicated Tesla was expected to go down today, was expected to be lower, had increasing bearish volume, bearish momentum, and a lower high and a lower low were expected. Another great way to apply your analysis in a down market. Here's another one, SMCI. Let's talk about a really great day trade setup utilizing this kind of analysis. I know there's a lot of day traders out there that are looking for a way to really maximize that. I mean, when you stop and you think about it, I've got a couple of really great day trades here. Here's BlackBerry and SMCI. We're going to look at both of them. BlackBerry had a monster trend to the upside. Let's see. Oof. From the time that VantagePoint indicated BlackBerry was expected to go up to the time that it indicated BlackBerry was expected to go down, that's 100% gain on the underlying asset on a stock that was $2 or $3 a share. Okay? So when you stop and you think about that, it's like, wow. The underlying asset moved 100%. What would a call option done? But that's neither here nor there. Let's talk about how to maximize these moves in a down market, because we got a fresh crossover right here. You can see it. Look. Crossover, neural index red, momentum indicating bearishness on the horizon. Did it go straight down? No. Right? The next day we had a little bit of bullish day, but we did have a lower average price the next day, indicating the trend went down. There's always going to be down days and up trends, and there's always going to be up days and down trends. Nothing goes perfectly up or down, but the overall trend certainly continued lower. So from a BlackBerry standpoint, taking advantage of a short-term day trade on this, here's a strategy I like to use in a down market. As I'm splitting this predicted high and predicted low in half. For you day traders, take a look. There's a predicted midpoint right here on my chart, top left corner. $5.31. $5.31 is where this software is saying that's the midpoint of what was predicted for the high and the low. Well, what I want to do is find an open somewhere north of 531. Why would I want an open north of 531? That's because I want to maximize my entry and ride the trend lower and maximize my exit. All I want to do is short that opportunity above that midpoint. Let me erase that. Short it somewhere up here and exit it somewhere below that midpoint. That's all I want to do for a winning day trade, right? BlackBerry went as low as 463 today. It opened at 535. Remember what I said? It was valuable to have an entry above that predicted midpoint. 535 is above that predicted midpoint, and it fell all the way to 463 today. That's a major drop. It didn't close that low, but man, imagine picking up 10% in a day trade right there in one day on a stock that was $5-6 at the time that it was predicted to go down. That is a strategy that can work well in a down market, grabbing some quick trend opportunities, some quick day trades, going with the flow of the markets, not against it. Which is why I do that 10,000 foot view, that market overview, to understand what is going on from a market prediction standpoint, or in your case, if you're not using predictive tools like this, what has happened in the markets most recently, and how can I utilize that to make a trade decision in the current markets, okay? SMCI, same setup, same idea. You can see it. SMCI had a bearish forecast here starting on 12/24 on the shortest term forecast in the VantagePoint software, and you can see it was expected to go down, and everything certainly went lower based on what VantagePoint predicted. Down markets don't have to be scary as a trader. They can be scary as an investor, right? And for those of us that all have long-term portfolios and have a portion of your money that is in a long-term, yeah, that hurts. But you have the ability to utilize some of these strategies, in my opinion, to mitigate some of those losses by trading the short side, by buying the inverse ETFs, by buying puts, and doing all different kinds of strategies where a bearish market can create gains. All right. One last one that I want to show you guys, and this one is related to Bitcoin. And I don't care if you buy cryptocurrencies or not. This is an ETF, folks. If you buy ETFs and sell ETFs, here is an ETF called Bitcoin Investment Trust. Bitcoin Investment Trust tracks the Bitcoin asset, and it buys and sells like a stock. It trades just like a stock, and you can see VantagePoint indicated at the same time here the most recent downtrend in Bitcoin, that there was bearishness expected. And from that point until the close yesterday, let's just look at Monday's close here, that's almost 5% fall off. That's nearly a 0.5% a day or so in Bitcoin Investment Trust. Again, Bitcoin is down in the 80s. Bitcoin got torn up today. Well, guess what? Trading that to the short side, taking advantage of an ETF that tracks the cryptocurrency as a stock trader, buying some puts, short selling that opportunity is a great way to take advantage of the downfall of Bitcoin, even if you're not a cryptocurrency trader without a cryptocurrency account, right? If you're not a cryptocurrency trader and you don't have a cryptocurrency account, this is available in your stock account, okay? Again, the key here, folks, is that you take advantage of the information you have at your disposal. I'd love everybody here on this call to have the VantagePoint artificial intelligence software, but even if you don't ignore the tools that you're trusting your hard-earned money with. And if there's anybody on this call that wants to get VantagePoint and you don't have it, just go to that VantagePointForecast.com or give us a call. We'd be happy to answer your questions. Kadar, yes, there is a scanner to find stocks that are turning bullish or bearish. It's called IntelliScan. It's right up here. Look. I can click on IntelliScan, and if I open an IntelliScan, I have so many bearish and bullish scans that I can utilize to find more recent and new crossovers. These are all customizable. These are all my custom-built scans. You can build your own, but yes, absolutely. There is a scanning tool to find the moments that we are talking about as a group today. All right, so just to recap really quickly, we're talking about just straight up short selling the futures, a great way to make money in a down market. Again, from my educational standpoint, that's what I believe. The inverse ETFs that go up when the market goes down, buying and selling those like stocks. Buying puts to the downside. Very quick day trades, bearish day trades using predictive information to the downside. Again, using an ETF that tracks another asset that you may not be trading to make money to the short side. These are all strategies that work very well in a down market. And on top of that, for those of you that are comfortable short selling, let me give you one bonus strategy. For those of you that have no problem either buying puts or short selling, TQQQ. Here's why I want to show you this. The ETF that is the NASDAQ, the Qs, from an overall investment standpoint, for one share of the Qs, let's make sure we're all on the same page here. One share of the Qs is $500 roughly, right? I'm gonna zoom in on this forecast for everybody so you can see what I'm talking about. Here is the same move we've already talked about, but we're looking at TQQQ. Did I say enough Qs? Yeah, I said enough Qs. This was $89 at the close of that day when the software forecasted that trend to go down. $89.30, right? You can get 5 times, roughly, the amount of shares of TQQQ to the short side as you can the Qs. Think about that. You can get 5 times the number of shares. This is called number one, it's an ETF that tracks it. So it's not an inverse ETF, but it's called a leveraged ETF. It goes right along with the Qs, and something like this. If you could get 100 shares on the Qs, you could get 500 shares here for the same investment. And you can see from a share standpoint, that is a hypothetical gain of over $5,000 in 3 trading days, roughly. You get my point here, is that this is another strategy with leveraged ETFs that can bring profits in a down market to your account that you might be missing out on. I thought, based on what was going on with the market, based on what's happened and what people were saying that we were talking to here at the VantagePoint software, would be a great idea to get in here and show you some alternatives and some ways to make money in down market. None of this is advice, but more of education. So I'm glad you guys were all here. Somebody wanted to see NVIDIA. Let's pull up NVIDIA so we can take a look at what the artificial intelligence is forecasting for NVIDIA. Pulling it up on the screen now. There you go. The short-term forecast. I'm going to the shortest term forecast because of the volatility in the markets. For those of you that use the software, I always get that question, is Daniel, when do you use the shortest forecast? When do you use the medium? When do you use the long term? When there's a lot of volatility and things aren't very trendy, I'm on the short-term crossover. When things are a normal trend to them, 3 to 5 days at a time, I'm on the medium term, the 2-day prediction. And when things are in a much more longer, drawn-out bullishness or bearishness, 5, 10 days at a time, I'll use the long term to answer that question. All right? All right, good. So here is NVIDIA, VantagePoint, in forecasted bearishness in NVIDIA last week. Friday, it said NVIDIA was expected to fall. It's fallen since then. Let's look. NVIDIA closed 126.63, so somewhere in here, ballpark it. NVIDIA is down over 7% since VantagePoint forecasted NVIDIA was expected to go down. So somebody was asking for NVIDIA. That was the only ticker I saw, unless I missed some tickers. Brado, I'm not sure if I'm saying your name right, but there's the NVIDIA forecast. VantagePoint indicated some bearishness in NVIDIA. And if you've gotten hurt from NVIDIA, you didn't have to. Obviously, you can see where the artificial intelligence forecast was pretty spot on. Does anybody else have a ticker you want to see? If not, I've covered all the material that I think could be valuable in a bearish market like this. Of course, there's more trading strategies. Of course, we can dig into the minutia on any one of these strategies. But I think the first thing is knowledge is power. Knowing these strategies are out there and knowing how you can deploy them in a down market brings you some alternatives so that you can take advantage of the volatility and make money from it, right? Just don't forget, trading is hard. Nothing is perfect, and it involves risk. So you got to minimize your risk to the downside. Let me just scroll through and see if I see anything in here. Do me a favor. Obviously, it takes some time. It takes some effort to put together these kinds of presentations and to share this knowledge. Was this helpful today? Go to the chat box right now and let me know if this was helpful, valuable information, because as a team here, this is obviously complimentary education. But if it's not helping, if it's not showing you something valuable, then of course, I don't want to waste your time. So let me know in the chat box if you believe this is helpful, if these different strategies and the different vehicles are something that you can consider in future down markets, or even the one that we're in right now. That would be helpful for me to know. Thank you, Dan. I appreciate that. And everybody else. Jeff Knox says MDT. Let's take a look to see if that's in the VantagePoint software. Here is Medtronic. Are you holding a position in Medtronic right now? Whew, boy. Talk about some volatility. Let's go to our short-term crossover. This is clearly an earnings gap. Let's take a look if we had a recent earnings market on this. Let's look. I do have a indicator that shows me an earnings flag. Oh yeah, see, knew that, saw that coming without putting the flag on there. This is an earnings gap down. That earnings gap down, I don't know if this is something that you've traded in the past, but it came down, created support. What I say is, after earnings, we wait 72 hours to make any decisions on something that just had an earnings call, unless you have an earnings play at your disposal. If you don't, the first forecast I would use, in my opinion, from earnings is the one that we got 72 hours after earnings. This is 1 day, 2 days, 3 days after earnings. So the first day that I would use any type of analysis once that fundamental impact is done is the one from February 21st. February 21st said that there was bullishness expected in Medtronic. VantagePoint said last night on February 24th, Monday, that we were expecting bullishness today on Medtronic. VantagePoint indicated that there was some strength in trend and momentum had shifted bullishly, and we could expect a higher high, not necessarily a higher low. We got an outside bar predicted, but certainly a higher high, which means if Medtronic went up today, it would not go up very strong or very hard or very big, but it should still be an up day based on what the artificial intelligence is saying. So, Jeff, hopefully that was valuable for you. Let me see if I can pull up Medtronic. Okay. Jeff had a high of 90.85 and a low of 89.22. VantagePoint forecasted a low of 88.82 and a high of 91.37. So that means it stayed right within that predicted bar. So it literally, folks, check this out. It traded from here to here today, right inside of that gray bar that was predicted at 6:30 p.m. last night. And tonight at 6:30, Jeff, for you in that case, you can see how that trend is expected to move higher. But again, if you don't play earnings, and I'm not even thinking about Medtronics for this, at a minimum, this period of time, it's actually a little bit bigger. 21 days before earnings and 3 days after earnings. If you don't have an earnings play, this is the way I think about it, I shouldn't say you. If I don't have an earnings play in store, then 21 days before to 3 days after, I'm not even thinking about it. Once that period is over, then I can say, all right, what does my analysis say? And you can see outside of that, for me, that no play zone, nice big uptrend with an exit, and then now a new fresh uptrend outside of that non-earnings play zone. So there's another bonus strategy for you guys based on the way I look at the markets. Okay, good. Suzanne, I appreciate your question. She was asking if I recommend options on NVIDIA. I don't recommend anything. This is purely education. So your trading style will certainly be up to you. Here's a Russell IWM. Looking for a short on the Russell. Well, yeah, VantagePoint indicated major bearishness. Look, let me zoom in again. Major bearishness on the Russell. I think everybody can see the crossover here. The Neural Index red, momentum indicators pointed down. It's wash, rinse, repeat, and it should be like that for whatever tools you're using yourself. Do I have the same setup I'm looking for? Right? Hey, Bill, nice to see you, my friend. Glad you were here. Boom, same setup, big move to the downside in IWM. When you stop and you let's just do a quick, what do we call profit calc here at VantagePoint. Where did this go since the forecast? Down almost 5% since the forecast, my friend. VantagePoint said that we were expecting more bearishness today, and I'm looking forward to the 6:30 update tonight. So good. Damien says, there you go, Jeff. So got out before earnings. Okay, so you and I think very similarly, my friend. Damien says, hey, could you please show how VantagePoint looked last Friday before the sell-off on the ES started? Damien, you must have missed the beginning, my friend, because that's exactly what we did. VantagePoint forecasted the reversal on the ES on Thursday, February 20th. You can rewind on this video and go through that analysis. By the way, for anybody, this video is available. Subscribe to the VantagePoint AI channel right there in YouTube. When you subscribe, these videos are on our videos page. Just go to the live section and you can check out all of that stuff. All right? Good. Kedar, I love your suggestion. Kedar's suggestion is, can we do one of these sessions at 6:30 so you can predict some stocks for the next day? That kind of information is reserved for the VantagePoint users, my friend. Again, this is complimentary training and education, but absolutely. Here, look, Damien says he did miss it. So here's the ES, Damien. I'll zoom in on it for you again. Here's the forecast of the downside on February 20th. This is the forecast he was talking about. He said, what did VantagePoint say before the sell-off on Friday? VantagePoint said bearishness expected on Friday, my friend. So sorry you missed the beginning, but you can also go back and watch the video. All right? Whew. Thank you. First of all, thank you for taking the time to learn some of the stuff with me today. For those of you that are part of the VantagePoint family, thank you for being VantagePoint family members. And for everybody in this session, I always like to say thank you for letting me give you the view from my vantage point. I'll see you on the next live. Have a good one.